Welcome to Big Boy Crypto, where our mission is to empower you to have financial freedom through crypto assets. And if you like the sound of that, make sure you hit that like button. Make sure you hit it right now, or tap it, or smash it, or elbow drop it, or give it the big leg from the top turnbuckle. But this is an NFT update. No, it's not. It's Around the Blockchain, your favorite show where we talk about your favorite topic with your favorite guests. Today is no exception. We're going to start in the top right. We get to see the twilight fall behind him. It's one of my favorite parts about having Joe on. Joe Parys, low cap extraordinaire. Definitely check out his channel. Then in the bottom right, we have rocking a new background, Tom Crown. We all got so used to the opulent palace, the mansion behind you. Now, do you have some golden wings or something going on? But take a little getting used to. Then in the bottom left, we have MacNCheeasy, who's just given some hair tips to BJ off camera. So, maybe follow him on Twitter. He might have, a little head and shoulder pattern or head and shoulders in the bottom. We don't know. And then on the top left, we have Ben Armstrong back from Cali. He went back to Cali. That wasn't your first time, right?
Back for the first time.
Back for the first time. How was the Super Bowl?
Super Bowl was amazing, really cool. I got to say the highlights for me were I saw a lot of celebrities, saw a lot of first class A-list celebrities. Doja Cat was really close to me, The Weeknd, all that. But the biggest one that I was impressed with was Steve Urkel. So
Jaleel White himself?
So close to him that I read the name on his credit card to verify it was him. Amazing.
Wow. A big Jaleel fan here. A big shout out to TGIF. Great wholesome content in the 90s.
Family matters.
Family matters.
Family does
step by
matter.
step. Family does matter. And you know what, Bit Squad, you're our family, so make sure you hit that like button. Let's grow the Bit Squad. Let's get as big as possible. But today we're going to be talking about Warren Buffett, not a buffet. A buffet didn't invest $1 billion. We have Warren Buffett getting more Bitcoin exposure, this time in the tune of a fat Billy. We also have self-hosted wallets. What's the pros? What's the cons? Should you even care? And layer 1 and 2 vulnerabilities. Hey, watch your crypto, okay? It's a dangerous world out there. It is the Wild West. But before we get into that, we are going to check out the broader markets as a whole. Let's see what's going down. It seems to be a pretty good day. There's some rumors saying this is because of Canada and all the shenanigans they're trying to do with their financial system. But we have a very nice crypto pump happening right now. We have Bitcoin above 44,000. I do kind of want to just refresh because we are so close to the edge there. Yeah, holding support at 44,000. Oh, it just went up a buck. Get those longs in. And we have Ethereum pushing right at 3,100. So market's looking good. XRP's up. Cardano's up. Solana's up. Luna is up. The markets are looking good. I'm going to bring it to you, Tom. You're our TA guy. Is this all from, what's going on to our neighbors to the north? Or, was this kind of telegraphed in the charts ahead of time?
Yeah, we had a long period of just down. And so to see a little bit of up, not really surprising, I don't think, to anybody. Does this have to do with what's going on? I don't think we should discount it. I think that this is definitely what crypto is for. It's the democracy of money, speech. And so it does make sense to kind of see these two events happening at the same time. But I think it's probably, that's a hopeful take, and it's likely we're just seeing a little bit of recovery after a long period of pain.
All right, yeah. A sea of red is good to have like a little of that sea foam green, washing up on the shore. But let's talk a little Warren Buffett investing $1 billion. Those who don't know, used to be the world's richest man. I remember reading the financial section of the newspaper in high school. I went to a public school. I had to educate myself somehow. And I remember when Warren Buffett was dethroned as the richest man. So this man in the financial circles still holds a lot of weight. He was the world's richest man for a very long time. His company was Berkshire Hathaway, and they just dumped a portion of their Visa and MasterCard holdings, and they're increasing their exposure to the Brazilian bank Nubank. And that everyone knows they, made headlines about it probably half a year ago. They, took a lot of strides in accepting Bitcoin in the Brazilian economy, kind of laying down the framework for their citizens to have more Bitcoin exposure, a very Bitcoin-friendly bank. And he's rejecting these card companies, moving into a Bitcoin-friendly entity. Now, Mac, does Buffett softening up on these crypto assets, do you think that's going to, create some sort of shift in the traditional retail investor mindset? A little bit older, kind of remembers, the old school investment strategy, maybe a little bit hesitant to invest in these newer technologies that they don't understand. They see Warren Buffett jumping in. Do you think that's signaling a shift here?
I totally think so, right? Warren Buffett is one of those legendary investors. He falls in like the group of the Peter Lynches of the world, where it's these are the investors that my parents tell me about. You know, what is Warren Buffett doing? You know, a dividend value investor. What is Peter Lynch doing? Peter Lynch, invest in what you know. And these guys, a lot of the older investors, in a sense, look up to, or at least kind of defer some of their strategy into what they're doing. And by Warren Buffett saying, hey, we're going to get exposure, you know, maybe it's a combination of Bitcoin, maybe it's a combination of getting into Brazil, an emerging market, an emerging opportunity. Uh, it's just signaling in the direction that everybody's going, which is accepting and getting to the crypto ecosystem. And I think it's important to note, like, Warren Buffett is kind of the OG hodl gang, in a sense that one saying that he always says is, our favorite holding period is forever. He doesn't like selling any asset. He likes holding forever, getting the dividend. I think Berkshire just made over 200 million from Apple dividends. So he is an OG hodler. So he's got it in him. And I think over time, it's just a matter of time until Bitcoin is on something like Berkshire's balance sheet from an asset standpoint.
Boy, I'm sure the markets are definitely going to like that when that day happens, if it happens. Now, Joe, before we went live, we were talking about, some basketball games, and you're going to be at the Stables, and you might see Mark Cuban. We were talking about Mark Cuban. Now, Mark Cuban famously was kind of against crypto, and now he's kind of, now he's pro crypto on some level. He still likes regulation. We saw it with Mr. Wonderful, Kevin O'Leary, very anti-crypto. Years later, now he's coming around. We have Warren Buffett had all these inflammatory comments about crypto, but you dig in their holdings and they have some Bitcoin friendly companies. So are we seeing the end of the celebrity investor bashing Bitcoin? Is that no longer cool? Is that going to, backfire, unless you're Peter Schiff, of course, and it's your brand. So are we no longer do we have to no longer worry about these celebrity talking heads, kind of bashing Bitcoin on some of these financial stations?
Well, thanks, DZ, Ben, and the Bit Squad for inviting me back on the show. Really grateful to be here. Always a great time. Getting into your question, it's kind of like a bunch of dominoes falling eventually. And, Buffett didn't just outright buy, $1.5 billion worth of Bitcoin like Tesla and a lot of these other companies have, and MicroStrategy. However, he is kind of slowly moving towards a more Bitcoin-friendly portfolio, right? And so are these, are the other celebrities going to eventually follow suit? And is it going to be something where it's just kind of like normal? I definitely think that we're heading in that direction. And, results don't lie, DZ. Honestly, if you take a look at Bitcoin and cryptocurrencies, they're the highest appreciating asset class ever. So it's really pretty hard to bet against something that just keeps, going up and to the right over time. And, whether it's Buffett or any of these other celebrities like Cuban, it's just going to take them time to learn the game. That's one of the things we talked about, before the show is you got to put your time into this market, right? Cryptocurrency is like learning a new language. And, for the Bit Squad and everybody else out here, just keep putting your time into it. Keep coming back to the show, smash the like button, do all that fun jazz. And honestly, you'll put yourself in a really nice position and, hodl strong, right? Just like Buffett is a hodler. I think we're all kind of in that camp, and yeah, definitely think that the dominoes are going to start to fall here with a lot of the celebrities if they're not already.
All right, well, you bring up dominoes. We saw that with tech stocks in the late 90s, early 2000. A lot of people, they totally missed that bubble, and then when it crashed, then it was kind of normal to invest in a tech stock. Something a lot of people stayed away. Warren Buffett himself famously stayed away from tech stocks, much to his detriment. So he lost a lot of gains. There's still a lot of things he won't invest in just because he doesn't, maybe understand the underlying technology. So we're seeing, people slowly start to shift over one by one. They're becoming a little bit more friendly. Now, Ben, do you think there's a period where traditional stock, people, it just isn't a thing to be invested in crypto, where you look at crypto, you look at Bitcoin, how you look at a Netflix stock? Are we ever going to see that day?
Crypto is not a stock. And I think like the fact is that since it's not a stock, I don't think people will ever see it as a stock. So what that means is I think there's a learning curve there for people to get involved in crypto. There are people out there that are comfortable in buying stocks and they're uncomfortable in buying other things. And because of that, I don't think we will ever see those people move into crypto. I just don't think we're going to see it. Anyone who is open to the idea of a new asset class, like they will eventually end up here. But those super, super, super risk averse people, like we don't really want them in crypto. You know, I mean, that's a fact. If you're super risk averse, you're not going to do well inside of an asset class that is the greatest redistribution of wealth in the history of the entire planet. So, you know, we don't want those people in here. Like they're the traditional people that have already made their money or they're risk averse. They're the reasons that crypto get a bad name. You know, they come into crypto and then they lose money. You know, it reminds me of the guy who was doing the XRP lawsuit, not the SEC lawsuit, but it was an XRP class action lawsuit where they blame Brad Garlinghouse. I can't remember the guy's name, but he basically invested a bunch of money into XRP near the top at 2017 and then blamed everybody else for their problems when the price went down. Those are the type of people we don't want in crypto. Like we don't want somebody who's going to come in and take a loss in a day or in a month or in a year and is going to say, see, we told you it was all a scam because the price goes down, you know? And so I think we're not going to see those people transition into crypto as the long and the short of it. And we don't want you here.
No, that's a good point. You know, when you put it that way, there's people who are uncomfortable investing in gold. Gold's been used as currency for thousands of years, and it's just not a stock, so they don't like it. So I would see those same people definitely still having issues. Now, Tom, does Warren Buffett still have influence, or is his misses over the past 10 years, you know, he doesn't quite have the juice he still has? What would you say about Warren Buffett's influence today? Is he, you know, does he still have the juice?
I'm going to say it certainly is diminished. He was a legend, is a legend, but look at the guy's history. He's one of the most successful investors, but the environment in which he's been investing over these years has changed. He's very focused on productivity, products, creating something, and that doesn't seem to reflect the stock market right now. With valuations at 50, 100 times the company's earnings, that's kind of disconnected. So I think this is just another example of that disconnection. He called Bitcoin, I want to get this out there, rat poison squared. Now his company is softening or edging into it. And, you know, I think I don't blame him. That's kind of the era he's from, and things are changing, and he's going to be slow to do it. And I would imagine he didn't even really have anything to do with these new investments. Likely this was maybe younger people on the team or just other influential people on board saying, hey, we got to get something into this, or we need to at least wade into the crypto space. I think it really comes down to just when he's from, you know.
Yeah, definitely. I'm sure it was, like you said, other people in there, you know, like you said, softening leads to edging. So, you know, they've slowly but surely, you know, got that exposure. But let's go to the lightning round real quick. I'm really looking forward to Joe's answer on this one. We like to call him the low cap Jim. We're going to start with Tom and go in a circle here. All right. Aside from Sandbox and Decentraland, besides Sand and Mana, what's your favorite up-and-coming metaverse project? Tom, what is your favorite up-and-coming metaverse?
Oh, God. Good starting with me. Gala comes to mind. There we go. Next person.
All right. They're spending a lot on marketing for sure. MacNCheeasy, what's your favorite up-and-coming metaverse?
A little less traditional of a metaverse project, but Wolf Game. Wool is the first true play-to-earn on-chain NFT project, and is extremely, extremely interesting.
All right. OG project there. Ben, what would you say is your favorite up-and-coming, not Mana or Sand?
Yeah, this is one that we are invested in, but, you know, I'm under no obligation to talk good about any project I'm invested in. We literally love Blocktopia. We think Blocktopia is definitely up and coming. I love the active nature that they're taking to bring people into their metaverse. So I think Blocktopia, Sandbox is our favorite by far. We think it's, you know, the most advanced, going to be the #1 winner, but Blocktopia definitely has a lot of potential. And honorable mention, Seek VR is another one to watch out
Oh, yeah.
for.
Shout out to the cat. Now, Joe Parys, give us something with a market cap above 70, 80,000. You know what I mean? Like, let's go at least $1 million market cap. I know you like those low cap gems. We're trying to get away from these coins here on the channel. So, Joe, what's your favorite up-and-coming metaverse?
I think you're gonna like this one, DZ. You know, it's a little bit more volatile to say the least. $97 million market cap. Full disclosure, I do hold some of this cryptocurrency. It's a solid project in my eyes. It's called Network. Ferrum Network incubated this one. Yeah, NetVRK. And they just launched their NFTs for like vehicles and a couple other things on OpenSea. They've been doing pretty well. One to kind of keep an eye on potentially.
Yeah, I had some. I paper-handed last year before the Meta announcement, so I ended up losing out on some games. But I took that 20% and I ran old paper hand easy. But let's jump topics here. We're going to talk about self-hosted wallets. So we had a congressman, it's a Republican out of Ohio. I'm sure this had a little bit to do with, you know, our neighbor up north, their whole situation going on right now. But they introduced some new legislation to protect self-hosted crypto wallets from government agencies. I don't want to get into the legalese. It's a whole, you know, long paragraph where they make it vague on purpose, but it essentially bars agency heads from restricting crypto transactions with these self-hosted wallets. Now, just a nice broad question here. Ben, why is this important for the average Joe?
Well, I think it's greatly important that people understand self-custody. And I think that this is something. Wait, did you say the average Joe? Because Joe Parys just popped up on my screen. Is this the average Joe? I don't think he's
anything but average. Anything but average.
He's definitely above average. I know this. I've seen him in person. He's above average, is what I'll say. So, his height, of course. Joe, how tall are you? How tall are you, Joe?
I'm 6'5", so
he's 6'5". He's a big guy.
I guess that's. I think average height for a male is like 5'10" or something like that. So.
It's 5'9".
We don't know the average height for a male.
Well, I'll tell you this. Joe, he may be 6'5", but he carries 5 inches like it's 8. He looks like he's 6'8". He carries it real good. So what I'll tell you is this: custody is very important. How can we have a serious show after that? I don't know. Look, there are people in my life who are newer to crypto, and like they get scared when they hear these stories about, you know, Canada, you know, seizing digital assets and all this stuff, but they don't understand that the power in crypto is in custodianship, and that means the power in crypto is you own your own assets, and no one can take it by force. Someone can coerce it from you. You know, a policeman could come to your house and say, hey, you know, crypto is illegal. We're here to seize your crypto. And then you could hand them your private keys. Like that's a scenario that could happen in the future. But you have to hand it over to them. You don't, you know, they can't just seize it by any way other than you. It's just kind of like phishing, right? We've talked about how most hacking is actually phishing, where they're not super secret spies. They're not able to crack your wallet. They're able to craft a story and a narrative that makes sense. So you hand them over your information that they use to get into your accounts. Really, governments can do only the same thing. They have to coerce you into giving access to your wallets. Whereas if you were to keep it on, let's say, Coinbase or BlockFi or Celsius, really you're at the whim of that company and their word that they won't hand your information over to regulators or government officials. And, you know, look, I love Alex Mashinsky. I don't think he would do something like that, but if the regulators came pressing, he would have no choice, really. Yeah, exactly. It doesn't matter how idealistic the people behind the exchanges are. The fact is, if regulators come and knock in and apply the pressure, they're going to have to submit or they lose their whole company, especially if they are, you know, an American-based company or have offices here in America. They have to play ball with the regulators. So really, in crypto a lot, we talk about trustless. We want this to be a trustless society where everything is done like based on smart contracts or based on decentralization. It's open, it's permissionless, but it's trustless. When you send someone Bitcoin, we know because the network is transparent and it's open that we can see the transaction. You don't have to trust that the person's going to send the money. You see it come in. Well, when it comes to custodianship, when it comes to exchanges, that's trust. You have to trust that they're going to protect your money. Whereas opposed to if you own your own wallet, if you own your own private keys, if you are a self-custody individual, no one can take your crypto from you. And I think that these are things that even the regulators and the politicians don't really seem to understand because they keep pressing, for regulation on one side or the other. But at the end of the day, blockchain is such that, they don't have to play ball with us. They don't have to play ball. We have the power here.
Yeah, those are great pros for those wallets, and definitely some great cons for not keeping it on an exchange. Now, Tom, let's flip that though. What are some of the risks associated with, self-custody wallet, and do the pros outweigh the cons here for you?
Oh, the pros absolutely outweigh the cons. There's going to be risk, and this risk is akin to the risk that we have entering the future. What I mean by that is technology, the internet, brought more risks, but it also brought advantages. So the risks would be we need to be aware of OPSEC, of how to behave on the internet, meaning we're not downloading random things, we're not clicking links, we're not giving access kind of willy-nilly to whatever. We live in a world where there are people looking to take anything from you. And we seem pretty good about that in real life. And then once we get on the internet, we seem terrible about it. So I am so about, this is interesting, Congressman Warren Davidson was the one to introduce the bill. Warren Buffett, Warren Davidson, so Warren kind of day. It's really important that this is introduced. And I think you're totally on point when you say they don't really even know what they're talking about. Agreed. But what's important is that it's laying down framework so that someone can't just slap something into a bill and say, oh, well, no one's allowed to have their own wallet or some kind of gibberish, because that is what they're going to do. They don't know what they're dealing with. And so they would think logically that would work. This will do something. In reality, that would just kind of make everyone a criminal for no reason. It wouldn't be enforceable. And so to see these people put forward any kind of legislation that's thinking ahead, to me, is amazing. And what we need to do is we need to go out and we need to vote for these people. Anyone that supports crypto, period. I'm a one-issue voter now. You support crypto, I vote for you. Let's get these people that know what they're talking about and support crypto into seats of power. That's like 2022's biggest thing for me.
10 years ago, I would hate hearing myself say this, but I'm very slowly becoming a one-issue voter with as well in regards to crypto. So totally with you on that one. Now, Joe, are these self-custody wallets, is that going to just end up being too burdensome and cumbersome for the average investor? Do you think they're mostly still just going to keep it on the exchange wallet per se?
I think it depends on the investor. And if we start educating more on, first off, what kind of wallet, what is this, right? Because most people, when they think crypto, they think Coinbase, at least in the States, right? It's like, you think crypto, oh, where do you buy it? Oh, everyone thinks to just go to Coinbase, right? And, that's how I thought when I first started, 4 or 5 years ago. So the thing is, though, is there's so much more that goes into it, and the education part really needs to catch on. The other thing, too, though, that I really liked about this, to me, cryptocurrency is about freedom. That's what this is about. This is about freedom. You are in control, right? And so when you have your own, let's say MetaMask or, non-custodial wallet, you have your own coins in there. You can do what you want. You can transact. You can move it at any time. You don't have to wait on Coinbase. You don't have to wait for it to, crash like it did in the middle of the Super Bowl. Like what would you have done if you wanted to make a transaction on Coinbase? You couldn't do it. And so to me, the freedom here is really, really important. And then it's the education. So that's kind of my take on this. And,
I love that.
Yeah.
I love that. Freedom to learn or freedom to not learn. Ultimately, the responsibility is in yourself. I saw the funniest tweet I saw about it said, the best way to learn crypto, you download a MetaMask, you send over some ETH, you mint a Bored Ape, you then click a link from the Discord, you type in your seed phrase, lose your ape, and then you email OpenSea. You do all those steps and you will know crypto. Now, MacNCheeasy, are all wallets created equal? What do you look for? What should the average person look for when they do look for a wallet?
The average person, I would say you go to something like a MetaMask. I think MetaMask would be your first step, traditional hot wallet. And then I think the next step would be something a little bit more secure, like a cold storage wallet, something like a Ledger. And I think those are kind of probably the two bigger names in the space. I think for all wallets, if you buy a hardware wallet, meaning that there's a physical wallet, make sure you get it from the original website. You don't buy
Yes.
it from eBay. You don't
Yes.
buy it from a random discounted link. If it's cheaper, don't buy it. Buy it for the full price. Be skeptical. Why is this? Because the seed phrase, and we've kind of touched on it, where if somebody has access to your seed phrase, they have access to your funds. And if somebody is selling you a wallet on a secondary market on eBay or something, they probably have access to your seed phrase. And if they then give it to you and now you then use said seed phrase, they have all of your money indirectly. They can take it, they can steal it. So make sure if you are buying a wallet that has a physical wallet, a hard wallet, you are buying from the source directly. And I think an important thing for learning about this is when you go bankless, right? When banks didn't exist and then they went to the bank, banks provided security, they provided logistics, they provided storage, they provide a value. When you now go from banks to the bankless, you're losing that value. So you have to put systems in place that will properly resecure your funds, whether that's having proper password protection, proper encryption. Like that service and that need in the market doesn't go away. It's now on you and the consumer and us as instructors to provide the steps such that you can now secure properly in the bankless environment.
Yeah, I love it. All right, well, let's get to our last topic here. Layer 1 and Layer 2 vulnerabilities, things to look out for. Reason we're bringing this up, there was recently a white hat hacker, which basically means a hacker for good versus a black hat hacker who's trying to steal your money. They made off with $2 million in a bug bounty. This was for doing the correct thing and showing the exploit. They won $2 million. You hear that, you developers out there? So they found a vulnerability in the ETH network. It was a bug that allowed you to basically steal from a layer 2 roll-up solution, Optimism. Now, this was found, no one lost any funds. Optimism, I believe, paid for them via their bounty system. So essentially, this hacker found an exploit, told the devs it was fixed, and then everybody's basically walking away happy versus saying nothing and then waiting for it to roll out and then hacking everyone's funds. Now, Joe, you're one of our layer 2 kings here. You're always finding these good up and coming layer 2s and even up and coming smaller layer 1s. Do you think that the layer 1s get a bad rap for the layer 2 vulnerabilities? And if so, is that fair?
No, I mean, look, cryptocurrency is very risky, right? Like, let's just put it out there. It's very risky. Any of these hacks and these things can happen at any time. And I think most people need to adopt a better mindset when it comes to these kind of things, because the truth of the matter is that I think we've all in this room either had, some sort of hack happen, some sort of funds, misplaced, something of that sort. And that's the learning curve into this. And so it's not going to be perfect. It's not going to be pretty all of the time. And I do truly think that while, yes, some of these, exploits have happened on some of these major like layer 1s, and these layer 2s are trying to clean up and fix some of these problems, there's just going to be, this is a new emerging technology. And so, and there's a lot of money into this, right? So there's a lot of money in crypto. And so hackers are going to, well, I mean, go find the money, right? And so, fortunately for this exploit, we had a good hacker figure it out and was handsomely rewarded. And so this is what we need more of in the space right now: is, hey, look, there's going to be problems. Let's fix them before something else really bad happens. The same thing could have happened to Bitcoin. There was a major problem with Bitcoin, and somebody by the grace just said, hey, you know what? There's this problem. They fixed it. They could have minted as many free Bitcoin as they wanted to. And so don't be afraid of things that, don't be afraid of things going wrong in crypto. I think if you're trying in this and you're really giving it your all and you're actually learning, you're going to make mistakes along the way. Things are going to happen. Just never risk more than you can afford to lose. And I think you're going to be in good shape.
All right, well, let's talk about, things going wrong. Now, Tom, say something does go wrong and there is an exploit on a, layer 2 coin or some sort of project does have an exploit. If that happens, is it game over for that token, or is it sometimes a good buying opportunity, once the dust settles?
Oh man, we've seen these in the past, and typically that does collapse the price, right? What I've noticed is these exploits typically have to do with the wrapped Ether scenario, and I'm not an expert on this, so I don't want to say too much, but it tends to come down to smart contracts and, let's say, loopholes in them. To answer your question that you asked a little bit ago, does that reflect badly on, say, Ethereum, the layer 1? I don't think so. I also would say this is a strength of Bitcoin. People say it's a boomer coin, it moves slow. This is why it moves slow, is the room for error is incredibly small when you're talking about something as profound as Bitcoin. Maybe some of these layer 2s that are new, not quite as profound, and so they can move faster. There's not as much at stake. But I would say that it is not really a buying opportunity. If they missed something the first time, I'm going to be skeptical the second time. You know, crypto already has enough risks. It already has enough reasons to be skeptical. And really what's happened is like that's proving that you should have been. And not every time is someone going to come along and take $2 million for a bounty over how many millions of dollars if they exploited it themselves. So good on that person for doing that, but it's not a good way to, I don't know, hedge your bets going forward that's going to keep happening.
Got Mr. Litecoin himself talking about boomer coins. You better watch out. If he's coming after your coin, you need to take a look at that technology. Now, Mac, do you think these layer 2s need to do a better job with their security, or is this just kind of, growing pains, just par for the course?
I think there's a lot of money in this space, and testing is one of the most challenging things to do from the technical side of things. So when you're writing these Solidity contracts or whatever, or a Solidity code, smart contracts, whatever you're working on, the QA and the test suites that you build out, those are really where you kind of earn your stripes in a sense of, because there's so much stakes at play here. And there isn't, you can test on like a Rinkeby test network or something, but once it's deployed, right, there is an opportunity here. But I think the important thing to note here is that it was identified. And that is what testing is for, and that is what these bounty programs are for. And I think testing, and from conversations with teams, that is a critical point for all development teams. But it is an emerging technology, and it is things where there is a lot of money on both sides of the equation. So the talented auditing teams, those cost a lot of money. The most talented people that can actually find these exposures, are they going to do it? Or are they waiting for them to come out? So I think it's a high priority for all of them. And that's why you see these $2 million bounties. That's not $0. And I think when you're considering like, oh, why would anybody do that when they can just steal hundreds of millions of dollars? Well, the thing about crypto is once you exploit the contract and you steal the money, that's not the end of the game. You have to then do something with that money. And the beauty of crypto is it's entirely visual. So it's a public ledger. So you can actually see activity. So if you steal $200 million, you better bet that there's going to be a lot of people that are trying to get that back. And they're going to try and watching every single move you make on the blockchain. Whereas this $2 million, this is effectively, quote unquote, hard-earned money, and you actually help your public persona. So there are reasons that exploiting a contract sounds better than it actually is in practice.
Yeah, no, look at the Bitfinex hack, man. They had $4.5 billion.
Look
they
no
managed to
there.
launder like none of it.
Yeah, they're sitting here getting $500, gift cards from Walmart at a time. So yeah, one thing I learned from NFTs: never underestimate the blockchain detectives. All right, final question. We're gonna send it to you, Ben. Here, what are some of the things that you look for, when it comes to investing in layer 2s? Are some more risky than others? What would make a layer 2, better or riskier? Have a higher, threshold than other layer 2s when it comes to what to look out for?
Well, I think the most important thing is that it works, and there's a record of it working to speed up the transactions. So we talk about ZK rollups and Cartesi and Polygon and Loopring. We talk about these because they're winners and they've already won. Like, they've already shown a record of working. There are so many more out there, though. Like, we don't talk about the ones that didn't really make it. I mean, if we were to go back and look at the list of layer 2s, from early last year, or really if you go back to early 2020, they didn't all make it. Not everything survived that, set out to be a layer 2 solution. So I think, when it comes to layer 2s, it is, you have short-term investing that's like, hey, maybe this coin will pump, whatever. But, when you're really doing long-term investing, you're really looking at, different types of layer 2s that really solve problems. I think the really interesting thing is to look, like, if you really want to know, like, a gold mine, a place where you can find some coins that might take off and do really, really well, you can start digging in and finding other chains that need layer 2 solutions and finding those, brand new layer 2s on some other chains. Because we already pretty much know what the winners are. Polygon, the big winner for sure when it comes to layer 2s. Loopring, another, big winner for the ZK rollup side. So I think really looking at, you look at Cardano and you see all their congestion problems, like they might need some layer 2 solution somewhere along the way. Solana, if it can, stay up and running, maybe they get some layer 2 problems. They can get, But I think that's a place to look if you're looking for really big up and comers. I kind of feel like, on Ethereum, we may not be seeing any of that anytime real soon.
I agree with that. I definitely agree with that. You're not going to be, super new with the Ethereum ones, but with these other chains, there's definitely some good upside potential there. But that is all we got time for. That was a close one. It looks like we have Joe Parys squeaked it out at the end, the lucky spot there in the top right. So, Joe, go ahead. Feel free. Leave us with some parting thoughts, please.
Well, thanks again, everyone. I really do appreciate being on the show. Make sure to follow MacNCheeasy, Tom, Ben, and the entire network of all the other cryptocurrency channels that they got going here. It's really amazing. So, whether you're interested in trading, NFTs, Metaverse, all that stuff, make sure to check it out. Smash the like button on the way out. It really helps with the algorithm and everything, especially now. And let's have a great week.
Tap, smash, elbow drop, hit that like button. Frankie Candles is live. Make sure you check out the latest episode for NFT Update. And that is all we got time for today, BitSquad. DZ out.